obviously going through today's presentation is just general advice only. It doesn't consider your personal circumstance. You just need to decide if it's appropriate to you. Past performance is not an indicator of future returns. All right, so let's rip into this. So we'll start off with Genex Power. So they release trade under the code GNX. K2 Asset Management can be found under the code KAM. So enter those codes into your watch list to stay up to date with company and the news. So first up we have Simon from Genex Power. The company really with a portfolio of renewable energy generation and storage projects in Australia. Genex was discussed by Ed from Pengara Capital at a recent Meet the Funds Manager event. Ed really provided a very compelling case for investing into Genex. To get that recording, if you want to type in just the ticker GNX into the question box, I'll send you a link across for that session. Look, Simon, thank you again for your time today. You now have control of the presentation.
Great, David. Thank you so much. I do appreciate the chance to be here. I guess Genex Power is purely focused on renewable energy generation and energy storage. And what you can see in front of you is our flagship project, the Kidston Renewable Energy Hub in North Queensland. Once a very large gold mine, which has been repurposed into a giant pump hydro project, which is currently under construction. And that's complemented by a solar farm, which you can see in the background. And on the next page, page 2, you can see that the company Genex is now, it's a diversified renewable energy player. And we're diversified by technology and we're diversified by geographic location. The business has got a very strong focus on ESG and we measure our performance there in the form of CO2 abatement. But very importantly for investors, we think we've got a proven track record of delivering projects. And we say that because we've now built 2 solar farms that have come in on time and on budget. The other key element to focus on is the revenue of the business. We lock in all of our projects with long-term revenue contracts. And in doing so, we give our business very, very stable revenue, which grows for many, many decades into the future. And so far, we've achieved $1 billion of project funding, which I guess goes to the point the business now has scale and it's got diversification of revenue streams, which really builds a robust business to take advantage of the next phase of growth. That shows us our projects and where they're located on the east coast of Australia. And you can see in the north of Queensland, the Kidston Renewable Energy Hub has been the focus of our business, and we're developing that site in stages. The first stage was a 50 megawatt solar farm. That 50 megawatts was constructed 3 years ago and is now generating strongly and producing strong cash flows for the business. The pump hydro project, the 250 megawatts of pump hydro, was financed earlier this year and is currently in construction. And when that project comes online in 2024, we'll see a substantial step change in our revenues and business's profitability. We've also got plans to develop a wind farm very, very close to that site. So we'll really have a very diversified business just in North Queensland alone. But what we're also developing is a battery project, and we're partnering with Tesla to build a battery project at Rockhampton. That project will be funded and developed later this year and will again step change our revenues from around this time next year. And finally in New South Wales, we've recently built a solar farm at Gemelong, which is near Forbes in New South Wales. That project was commissioned and is now generating revenue. So that's also 50 megawatts of solar capacity that's currently in operation. So turning to page 4, what I'd like to mention here is really some changes that are happening in the industry, and in particular the decarbonisation that this country is going through. And that's being supported by various state governments. And what I highlight here is the bar chart on the right-hand side, which talks to the level of renewable energy targets for New South Wales, Queensland and Victoria. And you can see those state governments have got targets of between 50 and 60% of capacity to be sourced from renewable energy by the year 2030. If you look at the blue lines, it shows you where those state governments are now in terms of capacity. And you can see they're around 20%, maybe 25%, depending on the state, which means between now and 2030, there will be a substantial investment required by the private sector to achieve those state government targets. And those governments are very keen to support that growth with various incentives. And just by way of example, 2 weeks ago, the Queensland government in their recent budget announced a further $2 billion of support for the industry in this year alone. So we think we're very well placed to benefit from that very, very strong tailwind, which will, I think, be evident over the next 10 years to support the development of our business. Just moving to the next slide on page 5, I'd like to emphasise that we as a business have a primary focus of making money for shareholders, but we want to do so in a way which is ethical and sustainable. And we look at our performance in the form primarily how we contribute to the environment and I guess how we contribute to the community and our people. So in terms of the environment, being a clean energy producer, we measure our performance here in the form of CO2 abatement, and the portfolio we've assembled is sufficient to offset almost 2 million tonnes of CO2 per annum. So it's a very significant contribution, which we're very proud of by virtue of the assets we've funded and developed. In terms of the community, our projects employ a lot of people. Just this pump hydro project we're building at the moment in Queensland is employing 800 people, and many of those have been sourced from the local community, and some of those are part of our Indigenous apprenticeship program, which again we're very proud of. Just stepping through to the next page, page 8, this is really what I call the money shot, which shows you, I guess, the revenue and profit contribution from our portfolio as it stands today. So this is our funded portfolio, which includes the 2 operating solar farms. And sorry, I skipped a slide there. I'd like to apologise and maybe draw your attention to slide 6, which really talks about our track record of delivery, and in particular the fact that we've now, as I mentioned, have funded $1 billion of projects, which comprises 100 megawatts of operating solar farms and the 250 megawatts of pump hydro, which has now been funded. All of those projects that have been built to date have been built on time and under budget, which is really important as to how we frame the thinking about delivering our hydro project and making sure that also gets delivered on time and on budget. On slide 7, we talk about some of the key relationships that underpin this business. And in particular, I'd like to talk to our revenue model and the parties we contract with to deliver the revenues I'll speak to on the next slide. So in slide 7, you can see the logos for Energy Australia. And of course, many people will be aware of them. They're a very large energy retailer. And we have partnered with Energy Australia to underpin the revenues for the pump hydro project. So that project, really I think about the pump hydro project as a giant water battery. It's a way of storing energy. And the way this will operate is that Energy Australia will be the operator of the plant, and they will pay Genex's project owners a fixed and known rental payment, which will escalate over time. And that contract is for up to 30 years. So it's really a very, very stable revenue stream, which doesn't vary by energy prices or energy volumes. And really, in many ways, is akin to a BBB rated bond, which is the credit rating for Energy Australia. The other key relationship we have on the revenue side is with the Queensland Government. And what we have there is a 20-year contract which underpins all of the revenues from our Kidston 1 solar farm in North Queensland. So the way that works is that provided the solar farm in North Queensland is generating and dispatching energy into the grid, there's an arrangement with the Queensland Government which underpins a price for every megawatt hour of energy produced. And finally, the logo there for AEMO depicts the fact that our latest project, the Gemelong Solar Farm, is currently selling into the spot market and is achieving spot revenues for both energy and green certificates. But over time, we will seek to contract a portion of that output with a major customer when the timing is right for us in that business. So stepping through now to slide 8, and what we can see here is, I guess, what I called before the money shot, which is the revenue profile of our business. And you can see in the bar chart in front of you that we have presented a revenue guidance here all the way until the year 2055. And we've done so because each of the projects I mentioned earlier are backed by these long-term contracts that are very secure contracts that don't vary by energy prices or energy volumes. So what we've done here is model those 3 contracts, and you can see that on average between today and 2055, we will be earning average revenues of just over $82 million per annum. So that's, I think, a key point of difference for this business is the very secure revenue stream. So you can see that, of the revenues, 85% of the revenues are baked in under those long-term contracts, with 15% being the revenues that accrue from the Gemelong Solar Farm that are currently being sold into the spot market. The other thing which we've done in this business is locked in our operations and maintenance costs, and those two are under long-term contract, and by virtue of that we can now give guidance as to the likely EBITDA margin this business will earn. And you can see there an average EBITDA margin of just below 80%, 79% to be precise. And that is explained by the fact that not only are the costs locked in, you can imagine though with solar farms, for example, the cost of the sun is free, the energy source is free. It's just the operations and maintenance which is modest in that context. So that's the revenue outlook for our committed projects, the 2 solar farms and the pump hydro project. Just moving on to slide 9, the next slide, you can see what we have here is some discussion about how we deal with our debt facilities. And in particular, we have debt facilities of just under $800 million. But what we've secured here is what we think is very low cost concessional funding. And the portfolio has a blended interest rate which we're paying of just below 3%. And that is explained because of the majority of our debt funding is from the Northern Australia Infrastructure Facility, which is a federal government development funding body which has been designed to stimulate key iconic infrastructure projects in the northern part of Australia. And we have finalised and in fact drawn down on that debt funding package, and we've now hedged those interest rates in for the next 15 years. So by locking in our revenues, by locking in our operating costs, by having clear certainty as to our debt funding costs, we have a clear and known cash flow which over time we intend to pay to shareholders in the form of dividends. Stepping through to slide 10, where we look at our growth strategy, and what you can see here is the business today has the 2 operating solar farms which account for 100 megawatts of capacity. We've funded the pump hydro, which is a further 250 megawatts. That takes the business to a capacity of 350 megawatts, including the pump hydro. But the strategy for growth is all about leveraging the relationships we've developed over time with government bodies, commercial banks, and key stakeholders in the renewable energy industry. And in doing so, we intend over the next 2 to 3 years to expand the portfolio to around 550 megawatts by developing and maintaining our focus on renewable energy and energy storage, and in particular developing a battery project and a wind project. And I'll explain a little bit more about that in following slides. Just on slide 11, just some words here on our pump hydro project. For those people that aren't familiar with pump hydro, it's nothing more than 2 water bodies. And basically you can think about these things as giant batteries. So what happens is when energy is in surplus and is cheap in the wholesale market, energy is used to pump water from a low reservoir to the upper reservoir. That water is then stored, and that water can then be released through tunnels and turbines to generate power at times of peak demand. So what it really does, it stores energy, it enables energy to be dispatched at peak times, and in doing so arbitrages the difference between peak and off-peak energy prices. Because of now the rapid growth of renewable energy in Australia, which by and large is intermittent generation, which means it's generating when the wind's blowing and the sun is shining, there's now a very strong focus on energy storage. So this project really has come along at the right time. It will be the first pump hydro project developed in Australia in 40 years and really will provide much needed system strength to the Queensland market. Stepping through to our existing portfolio on slide 12, you can see two images there of our two operating solar farms. The Kidston Solar Farm has been operating now for a couple of years. Because of its location in North Queensland, it has the highest capacity factor of any solar farm in Australia, so that produces a phenomenal amount of energy from that plant, and that's now complemented by the Geelong project, which we built last year. It's just being commissioned at the moment and is resulting in a step up in our revenues. So that's the existing business, which provides a very, very strong foundation, we think, to grow our business from that point. So looking at slide 13, we'll talk about our battery strategy, and this is really a strategy which keeps our focus on energy storage, and in particular looks at developing battery projects in Queensland, which is a market we know very, very well. What you can see on this slide in front of you is a chart which depicts likely revenues and the revenue sources that a battery can earn in the Queensland market. And you can see the blue line here depicts one of the revenue streams being energy arbitrage, which is when a battery consumes energy and charges it when prices are low and discharges the energy and generates when prices are high. The delta between peak and off-peak energy is one revenue source. And that is, I guess, complemented with the what's depicted here in green, which is called FCAS, which is payments made by the grid operator to effectively keep the grid in balance, frequency control and auxiliary service payments. So roughly those two revenue streams we think will present a very attractive and exciting revenue opportunity to which we seek to get exposure to. And I guess what we're doing here is developing a project, and this is really depicted on the next page. On page 14, you can see we've selected a site near Rockhampton called Bulacan Battery Project. It's located immediately adjacent to a very large substation which is owned by Powerlink, the big Queensland government transmission company. We've secured land immediately adjacent to that substation. We've just finalised a supply arrangement with Tesla, who are a tier 1 battery supply company, and we're just now finalising the connection process with Powerlink, and the expectation is that we could develop this project by the end of this year, or commence construction by the end of this year, which would mean that we'd be looking at having a revenue contribution from the Bulacan Battery Project by the end of next calendar year. So we find that very exciting. We think the revenue opportunity is definitely worth pursuing, and the short development times means that we can have very rapid growth to our business. And our thinking here is that if we can get this model right, the potential to develop further battery projects in Queensland remains a very strong option that we'd like to pursue. On slide 15...
Simon, I'll give you a couple more minutes. I'm just cautious of the time. So we'll just try, and then I just see a number of questions coming through for you as well, so I'll try to get to those.
I'll just wrap it up in a moment. So just on slide 15, we are very keen on developing a wind project which is near Kidston. We're doing that in joint venture with J-Power, one of our major shareholders. But I'll just wrap up by saying that on slide 16, we've got really what I think is a diversified business, diversified by technology, and it's diversified by geographic location. So underpinned by the two operating solar farms, we expect a step change in revenue when the pump hydro comes on stream in 2024. and the potential for short-term revenue growth from the bulacan battery project and the wind project over time really rounds out a portfolio which remains very much focused on renewable energy generation and energy storage. So with that, I'm happy to leave it there, David, and take any questions.
Perfect, great. Thanks very much for that. Look, I sit on the wholesale insto side of things, so I might kick things off, but I've obviously, the renewable sector has been pretty active with some M&A activity. So, what do you want to sort of just shed some light on what's driving this, and do you think that that's going to continue?
Look, it's David, it's interesting because there's been a number of listed Australian companies that have been taken over by some big multinationals in recent times. I'm thinking about Tilt and Infigen as two recent cases in point. Fundamentally, what I think is happening is that some very large foreign groups with very low cost of capital are seeking exposure to revenue streams that are locked in and secure. So I guess our portfolio is similar to those other groups, and I think over time that those dynamics will play out in the broader economy.
Yeah, okay. All right, Chris, good to have you online, Chris. His question is government 250 million supporting CW/state via what mechanism?
So I didn't quite catch that, David, sorry.
Yeah, so Chris, you might have to retype this, but he's asked what is government 250 mil support CW/state via what raising? Not sure. Maybe
yeah, look,
retype that.
I'm not quite sure, but I guess what I would say is that this project, the pump hydro project, being the first developed in Australia in 40 years, did attract very strong support from both the federal government and the state government in Queensland. And that concessional funding from the Northern Australia infrastructure facility was some $600 million. Is a federal government initiative, which I guess underpins the economics of the project. And the Queensland government, of course, have been very supportive, and there's been a co-funding of a new transmission line by the government and Genex, which will develop a new transmission line to connect the pump hydro to the grid in Queensland.
And that Kidston pump storage, that's where you really saw a group revenue outlook take a significant jump in that 2024 to 2025 period.
That's right, yes. And those are revenues are baked in based on the contracts signed with the Queensland government and Energy Australia.
Yeah, perfect. All right, Christian has asked, are your contracted revenues linked to inflation?
We do have inflation embedded into the contract, so I guess we're a nice inflation hedge in that regard. Yes.
Yeah. Okay. Patrick, could you ask for comment on and Star Scientific Hero Technology versus whether hydrogen production, it could be applied by KREH?
Look, I guess just a few comments on hydrogen. There's a lot of interest and focus, and there's clearly a big move by some major players to get involved in this industry. Our view is that there's still some work to be done for costs to come down before it's more broadly adopted. But there's no doubt that a lot of the end markets are looking to utilise hydrogen, and Australia's very, very well placed to supply hydrogen to those markets. And I'm thinking in particular Japan and some of the other Asian markets. They've got a very strong hydrogen strategy. And I think a number of Australian companies will be able to be part of that supply chain.
Okay. I'll just have a couple of final questions and then we'll transition over. If I've missed any, we'll circle it back around and I'll be able to get direct answers to those that I've missed with Simon. So Edward has said, great story. So why has the GNX share price been asleep for the last couple of years? And then what are the near-term drivers to give them the lift?
Look, it's a fair question. I think the pump hydro project, which we funded earlier this year, had a fairly long gestation period. There was a couple of false starts in terms of getting the funding in place. We like to think that's now behind us, and we're now executing on the construction phase with what we think is a very solid growth profile. So we think that we're well placed now to utilise the platform to grow the business's earnings, and I think over time that will be reflected in our share price.
Perfect. All right, fantastic. So look, obviously, Simon, thank you. Appreciate your timing and sharing the company storyline with our audience today.